Good evening, everyone. Welcome to today's webinar. I hope you all had a wonderful Memorial Day weekend. We had a shortened week, and in the meantime, I made a little move myself from down in the Chicago area. I'm now coming to you up in Madison, Wisconsin. So we moved the office at the end of last week, and everything is up and running, and we had a first day of trading in the new office. So I hope everyone is having a wonderful summer. And today's topic will be a walkthrough of my trading routine. So I had a couple requests for some other webinars, some other topics, including the one you see here, and I can put that list out in the next couple of days of some things that we'll talk about through the next couple of weeks. So first things first, trading carries a high level of risk, and you're subject to lose all or more of your original investment. So don't trade with money you can't afford to lose or money that, if lost, would affect your current lifestyle. The information in the presentation is for educational purposes only and is not intended to be financial advice. The purpose of the webinar is to help you better understand the markets and improve your skills as a trader. I really believe that a balanced life leads to a healthy life, and it's our attitudes that influence our behavior. And trading is a small but meaningful part of that bigger picture. So if you go to the member dashboard, you'll notice in there that I have a trading routine checklist. So in a couple of the other webinars, we've talked about things such as the gap fill trade, specifically the halfway back trade throughout the day on the ES and the 6E. Some of the specific things that I look for on the broader term, on the broader spectrum, across things like the SPY, the Dow. We've talked about volatility index, and we've talked about things like the daily and the weekly charts. So I thought tonight's webinar would be kind of a really nice way to kind of tie all that together. So without going into all of the specifics on things such as the gap fill trade and some of the stuff that we've talked about in the past, I wanted to walk you through my trading routine for both the week, for the morning, for the intraday, and we'll talk about Sunday night as well. So that checklist that I have up in the member dashboard that looks like this, I just kind of want to walk through the different things on here and kind of elaborate on some of them and hopefully answer any questions that you may have on some of the other topics here. So I think that'll be a nice framework for this evening. And as always, if you have questions, feel free to jot them in the question box and we'll get to those. So without further ado, I think what I'll do is log out of the PowerPoint, and we'll start with the analysis that I would do on a Sunday night. And I know, most of you are developing your own trading routine. You've gotten in that nice habit of going through the markets on a daily basis and kind of developing that consistent routine. And I know from conversating with a few of you outside of the webinar and via emails that it becomes helpful in creating that framework, because as we know, the market is spontaneous on a day-to-day basis. So the first thing I like to do on a Sunday night is to pull up a chart of the S&P. And on the weekly time frame, I like to begin on Sundays. And so if we look at the SPY, and we have the SPY because we have then the volume, you'll notice if I zoom in, I mark last week's high and low. And this is a situation where I do pay attention to the candlesticks. Now, we haven't talked about candlesticks specifically, but in general, this pattern that we've seen here, these large body candles to the downside with relatively stronger volume, that's pretty bearish. So, okay, that's where the analysis begins. A signal of bearishness. The other sign being this candle completely engulfs the prior candle, meaning we opened above the prior candle and then we closed below it. That's extremely bearish. So that, on top of the fact that we have another large body candle to the downside back here, and we've sold off rather abruptly on this increasing volume, is my first signal that would kind of form my bias going into the week, or form my broader term opinion, if you will. So from there, I like to go over to the Dow, and while the Dow doesn't have as many stocks involved, only 30, it does have some large companies, so I think it's important to look at. And what here, the same pattern, bearish engulfing pattern, and two large bearish candles to the downside. The third index I like to look at is the NASDAQ. Again, this is the weekly chart. And you'll notice most of the trends are the same. We've had kind of a move up, move sideways, move up, move sideways. And the NASDAQ in particular has formed this very large base up here. This was resistance. And now it would foreseeably become support. So again, we have large body bearish engulfing to the downside, but keeping in mind that we have this support level back here. And then finally, looking at the Russell. And notice that the Russell did not even pierce the prior swing high. The NASDAQ completely blew out of this prior swing high. The Russell didn't even make it, didn't even break that prior swing high. So the Russell is, while it tends to be a leader out of the SPY, the Dow, the NASDAQ, and the Russell. Out of those four, the Russell tends to lead. So that could be saying that, okay, the Russell wasn't even able to make a new high. Small cap stocks weren't able to break out to new highs. They've already started to retrace. And you encompass that with the larger volume on the down moves, whereas the up volume in black here has been a little bit smaller. Some strong check marks, if you will, some strong signals to the downside. So that's where I like to start on that weekly chart of those four. And then from there, we've talked about the VIX a little bit, so I won't go into it in too much depth, but looking at the VIX and how does that relate to the market? Well, the VIX has been creeping up, and we talked a couple weeks back. We had this consolidation, and we were chopping around. And I mentioned that that 25 to 35 window on the VIX is really the best time for trading. It's kind of that sweet spot. And over the past couple of weeks, the intraday trading, that is, has really begun to pick up, and we're kind of getting right into that sweet spot. So, some movement to the downside with increased volatility is really a great sign for intraday traders. Also take a look at gold, both while it's in the media and, most importantly, while it's not being talked about in the media. And, the trend in gold is still clearly up. We've kind of formed a large bull flag, if you will, or a pennant or a wedge, all basically the same thing. So I'd be looking for a move in gold to break, this trend line, this level. And to the downside, we would have support down here. So, just some basic analysis of general support and resistance on these broader term indices can help keep that bigger picture in perspective. So once I've knocked those out, then I like to go flip over to the ES and the 6E. So I think would be a good time to review where we're at on the ES and the Euro. So the last time we talked about the daily trend, and this is a weekly chart, so I will go to a daily chart, and I'll get rid of all these lines here. So the last time we talked about the daily chart, we had paused at this kind of arbitrary hindsight draw, if you will. And I had mentioned that, I like to always go all the way halfway back. When we start a move to the downside, when we start breaking slow, to draw the full halfway back and note where that is. If we happen to bounce off of some other level, well then I can look at that daily level, I can identify it in hindsight, and then I can zoom in 15 minutes in the direction of the trend. In this case, I could take 15-minute longs off of this daily level. And you'll notice that, for about a week, about 6 days, we did move higher, and, the 15-minute longs would be valid in that case. But it's important to note that the larger halfway back is still below us. So, we have the support level down here, and we also have the halfway back at 1243. So that's kind of what I'm looking for as the magnet to kind of bring us a little bit lower. You notice this little rally we had didn't even make it into, it didn't make it into the full halfway back. It didn't make it into this little, again, arbitrary halfway back. So there's a lot of bearishness in the market right now. So 1243, 1244 is what we're looking at for a potential to start taking long. So we'll be looking at 15-minute shorts. Once we come down 1244 and a 15-minute short breaks, meaning the 61% line, that short breaks, then we can start drawing 15-minute longs. So we have 15-minute shorts moving lower, and once we come down to the daily level, if we break that short, then it's valid to start drawing long setups. So I'll even go ahead and zoom into the 15-minute chart. And what I had drawn this morning was an extension short, because we, again, moved so far so fast. Coming into the morning rather, we saw off the extension. We kind of identify the high of the first hour and the low of the first hour. You'll notice that we broke the first hour's range to the downside, and then we never did break it to the upside. So the sentiment is still down. We're in the extension short, and that target below us is not quite at the daily long, but it's down pretty low. And let's see here. Gary mentioned the audio was breaking up there. What I was saying was the extension short that we had set up this morning. We had an extension short. I identified the high and the low of the first hour's range. We broke that first hour's range to the downside, and then the targets on the extension short, if we hold, are down 1255. Let me know if that audio was giving you trouble, Gary. And then just below that, we have the daily long at 1243. So from here, if we move over to the euro, I will maximize and go to the daily chart. Some interesting developments that we've had come up on the euro. Big daily short had traded, and I'm going to even back up and just review what we had going on up here. We had a big daily short, and we did trade into the long briefly, and that held just briefly. And then it was at that point, let me just exit out of this here. There we go. The long held briefly, 1, 2, 3, 4 tests of the long. We then broke that 61.8 of the long, and we started to sell off in extension shorts. And we did trade all the way down just about to that daily target. So I'm going to go ahead and draw up the next daily short. And at that point, we'll either look for a rally back up into 28.88 to take new shorts, or we'll see if we don't come down and just pierce the low and kind of touch this 22.47. But coming so close, within 30 or 40 pips, close is close enough in most cases. So if we were to rally up to 28.88, that would certainly be a next valid short. And again, looking at the daily level, we'd be looking at 15-minute longs up into that level. Once we hit the level, we wait for a 15-minute break to the downside, and then we could begin taking shorts. So it's a matter of identifying the trend on the daily chart and then zooming in to the 15-minute for execution, because you can pinpoint the entries and exits a little bit better. One of the other things I like to do, and I think is really important, is to review your notes from the prior week. Giving yourself the weekend to kind of relax, clear your head, think about some of the things that you may have done in the prior week, both good and bad, and be thinking about some of the things that you would like to improve upon. But then I think it's important to review your notes from the prior week at a time when the market's closed, when you can think more objectively. So you can do this each evening, but then I think it's also important to review them again on Sunday or on the weekend or at the start of the following week to kind of refresh your memory and maybe make some new notes on top of that. You can make your notes in the moment, if you will, in black pen, and then when you go to review them, you can add notes in blue pen. In the morning, going through the pre-market routine, what I like to do is start by reviewing my rules for the day, and in the writing winners and limiting losses webinar, I had a slide in there that I've pulled out and kind of an example of trading rules. And this was that slide. And this is what I'm referring to in the sense of reading your trading rules. We've talked about in the past kind of consolidating your rules down to perhaps a 3x5 note card or an 8.5 by 11 sheet of paper folded in half. And then when you can compact your rules, it makes it much easier to review them and to read them in the morning. If you have a 10-page trading plan, there's probably a lot of stuff in there that may contradict yourself. There may be things in there that so many things need to line up that it then becomes difficult to execute. So if you can get your trading rules down to kind of the simplest form and then maybe even have a couple of screenshots, if you're a visual person, taking a few screenshots of your setups is a great way to pack a lot of words into one photograph. So I think reading the trading rules in the morning is important, and again, it just helps ingrain those ideas into your head, into your subconscious, and then helps build that trader intuition. So then in the pre-market, I always like to begin by looking at the economic calendar. So I just pull up two calendars. The first one I look at is the Forex Factory for the day, because that gives me all of the European and the overseas markets. And then the other one that I look at is the economic calendar, and that would be from EconoDay. And that just gives the U.S., but it's nice to confirm just in case there is some sort of discrepancy. So, picking out, okay, Thursday and Friday, the 7:30 Central Time would be fairly important. Earlier in the week, there's not a whole lot of stuff going on. Beige Book is not a huge announcement, but it's nice to know that, okay, there are some things coming out news-wise that could move the market in one way or the other. Brian asks if I can send out examples of my index cards. Yeah, I mean, it's basically just let's see. Oops, it's basically just this guy right here. I use these trade management rules and the risk management rules, and I just change the contract size based on my account size. So one thing that I kind of rule of thumb would be to say, trade one ES contract for every 5,000, or you can use 10,000 in your account, and then The same thing can go for the euro. I would say for every 10,000 in your account to trade one 6E contract. If you're looking to scale, if you've already shown, proven to yourself that you've developed some level of consistency, just because you may have a large account size doesn't mean you need to trade large size. So it's important to start small and then scale up once you've developed that emotional control. I think is really important. So starting small, there's a lot of value to be learned from that. So I tried to make this slide as scalable as possible. Obviously, the setups would be the same. I have some specific notes I can shoot over to you on the setups in particular. But just scaling up the contract size and then scaling up the daily loss in the same proportion. Where were we? So we talked about the economic calendar. I don't pay a whole lot of attention to specific earnings because they mostly happen in the evening hours. And so Apple announces earnings, Google announces earnings. I'm not glued to the screen after hours watching those. But then we talked about identifying the daily trend, and then once the market opens, or once I wake up and start attending to the markets, I like to know where the 15-minute trend is. So in the morning, I drew up the extension short, and the 15-minute trend was clearly down. I was able to identify that. We didn't have any NYSE tick data yet because I like to begin about an hour and a half before the market opens. And so the 15-minute trend was down, and then on the euro, if I go to the 15-minute chart, we had come all the way halfway back, and that held. This was a halfway back over the course of about 6 days. We were going down in shorts, and those shorts were getting tighter and tighter and tighter. Then we broke the final short down. We had a little short down here, and then we broke the last little 15-minute short. So I drew all the way halfway back. As I said, I don't like to pick random halfway backs in the series to try to short on the way up. I just like to go right to the full halfway back, and if we don't make it there, that's a sign to me of more bearishness in this case. But in this example, we did make it all the way halfway back, but then the long also held. So when we have a short trading and then a long trading, it's just a matter of which one breaks first. So the 61.8 of the short broke. So what I did was draw from lows to highs, and we've now started to break out even higher. So if we continue higher and continue to break out, I'll go ahead and draw from highs to whatever those highs end up being for an extension long. But in realizing that, okay, where are we on the daily chart? Well, the daily chart, we are just at the negative 23% target. So if we go back to the 15-minute, this is the first 15-minute long in this new trend. So it wouldn't be, there's no reason to chase extension longs because there's such a high probability that we'll come all the way halfway back. And if you prefer to not limit the halfway back, you simply draw the full halfway back, wait for that to trade, zoom into the 512 tick chart, and take the first micro off of that level. So that's a simpler way to get into a trade, let that resistance or support level identify itself, and then get into the trade. And then you can use that target, that 15-minute target if you'd like, and manage the trade by either trailing the full halfway back. If you enter on a micro, you can trail micros all the way up until you get stopped out or until the 15-minute target gets hit. So there's a couple of ways to manage the trade, but it's important to realize, okay, where are the 15 minutes in their trend. And this is really the first and second 15-minute in the new trend. So that answers the question of where are we on the 15-minute chart. And then that brings us to, about, an hour before, really within an hour and a half before the NYSE open, I like to look for the gap fill setup. So in staying with the theme of today's price action, the close, the gap fill, was at 1276, and that would be the prior day's 4 o'clock close on the ES. So 1276 is where the close was, and in the morning was about we were trading right about 1270 this morning. So we were within 10 points of the prior day's close. So that tells me that in this case, with the close being above us, the gap fill being a long setup into the prior day's close, when we're within 10 points, that's a sign that big money hasn't come into the market and pushed it one way or another, whether it's from overnight trading in Asia or Europe, whether it's some big economic news announcement, or that's when, in some cases, earnings announcements can shake the market, or news out of Europe or Greece and things like that. So I like to use that 10-point mark and just identify, okay, will we have a valid gap fill trade today or not? And I just use that 10-point mark. So then the first trade that I'm looking for, aside from 15 minutes on the 6E, would be a gap fill trade on the ES. Then the first half hour of the day, the first half hour of the NYSE session rather, so 8:30 to 9 Central Time, I stop trading the ES, meaning I stop initiating new positions. If I'm in a gap fill trade and say it starts to move in my favor, I've tightened my stop and the bell rings, I remain in that trade with my target 2 ticks in front of the gap fill. But I won't initiate a new position until that 9 o'clock Central Time in the ES. The Euro doesn't have any time restrictions other than focusing on the 7 a.m. to 2 p.m. Central Time, and if it's a slow day, I'll typically stop at noon, and on Fridays I'll even stop at 10:30 on the Euro as the weekend approaches. So that's how I kind of go through my pre-market routine. And again, it's helpful to have that routine, helpful to have that consistency, so that you can then develop a framework to view the markets, if that makes sense. So you're going through the same couple of markets each day. Maybe you trade oil and gold. Maybe, obviously a lot of the folks I know trade the ES and the 6E, but it gives you that framework, that walkthrough to go through, and it's easier to pinpoint, or it's easier to identify things as they stand out. So it's easier to pick out things that are out of the ordinary when you've developed a context of repetition. So once the bell rings, then we have New York Stock Exchange data, the NYSE tick, and we have the breadth and the advanced decline line data. And I believe I talk about that in the tick and market internals webinar specifically. So I won't get into too much more on that, but from the market's perspective going into tomorrow morning, I would first look at the 15-minute and see, did we break the 61.8 to the upside, or did we hold and then sell off and break lows? Today's close, today's 4 o'clock close, is right about here, 1275 it looks like. So we'll be looking for a gap fill of roughly 1275, so if we're above it, within 10 points, we're looking to short. If we're below but within 10 points, we'll be looking for long. Gary asks if I look for tick divergences, and the answer to that would be yes. And what he's referring to is when we have a high tick that may or may not line up with a high price. So if we're selling off to the downside, we make a low tick and it lines up with the low. So we make a low tick and it lines up with the low price. That could potentially be the low of the day. Well, a tick divergence would essentially mean that we have a low tick and then we make a new low, meaning that we could continue to make new lows until we get a low tick at the low price. And the same thing goes for longs. If we're moving higher and we have a high tick followed by a high in price, that's a sign, that's a strength for the bulls, and we can continue to make new highs until we get a new high tick. So I really like looking at the tick extremes and where they line up with the highs and lows in price, especially right around that 9 a.m. mark, that first half hour of the day, and then the first hour of the day. You know, sometimes we'll pierce the first hour's range. We'll make a low tick at the low of the day, and then we'll rip, and that'll be the low for the day, or vice versa. We make a high that ends up being the high. We make a high tick and a high price, and then we sell off from there, and that ends up being the high of the day. And let's see, question was, I used the 1 minute tick with the 512. Yeah, well, my tick chart here is set to 1 minute, and I have a 1 period moving average. I'm really not as concerned with the time frame of the ticks individual, just the latest tick and the highs and lows. But yeah, the chart is set up for 1 minute, and then the chart I'm using on the ES, it's a little bit easier to zoom to a 512 because you get a little bit more data in there as well. So that kind of touches on the pre-market setup that I use. From the evening perspective then, so as we go throughout the trading day on the ES, I'd be looking for a continuation of 15 minutes or a reversal of 15 minutes. And today we had a couple 15 minutes setups to the downside, and then those setups broke the 61.8, and we had a rally back up to the extension short. So the larger 15-minute was down, so really this little 15-minute long here wouldn't be valid for two reasons. One, the larger 15-minute trend is down, and the second reason being we traded the short first, and I like to say whichever trades first is the valid setup. On the euro, there wasn't a whole lot of stuff going on so far this week, just kind of this slow move higher, at least in the U.S. session, but lots expected from the euro, especially as we move up now, the VIX being into this 26 range, a little bit more volatility, a little bit wider ranges on the intraday. And you'll notice that if I flip to a candlestick chart, the bars on the ES are getting larger. The intraday highs and lows are widening. The ranges are getting wider, and that's due in part to the volatility, in being that this is causing the higher volatility, and the higher volatility is causing the wider ranges. So I know I've talked about in the past, I've had the question in the past of, do I continue to trade? Do I stop trading? When do I know when it's time to stop? How do I know if I'm over trading? Those are all questions that I get a lot. And also the questions of, do you set daily goals? Do you set profit targets? As you know, I obviously set the daily loss limits that I really stressed on in the past. And I don't like to set a daily profit goal for the reason that some days will just be better than others. Some weeks you'll have a string of string of days that are just winner after winner, great trading environment. Other weeks you may have very low volatility and there may not be a whole lot going on. And if you set a daily goal of, say, $500 a day, you may stop trading on a very good day because one or two trades may hit your profit target, and you say, well, I hit my daily goal, I'm going to stop trading. Well, you stop trading, and then there's more good setups that you may miss out on. And then conversely, the following day, you may have one good trade, and your daily goal, for example, is $500. And you may say, well, I want to hit that daily goal, so let me look for another trade. Let me force another trade. And that's really what ends up happening. And then instead of having that one trade and ending up, plus 250 on the day with a goal of plus 500, you end up down 250 or down 500 because you're forcing a trade to hit that profit goal. So what I like to do is continue to trade on days where the setups are working, where I'm going entry to target, or one or two setups in a row, the 61 breaks, I get a first target hit, and then I start trading in the opposite direction. So those days are really great for trade. The days that are really good for intraday trading, I just like to continue to trade. And it's just a matter of going through the morning, and maybe you have a gap fill setup and an Euro setup, and 8:30 rolls around. You have another Euro trade, and then 9 o'clock rolls around. You're seeing all kinds of setups on the ES, and those are the days where you need to stay and continue to trade. And those are the days where I would stay till 2 p.m., trade all through the morning. Obviously being disciplined and focused on my setups, but you'll notice, especially on the 512 tick chart, that it's easier to identify the good days because we'll have these big swings of color change, essentially. On the Heikin-Ashi candlestick chart, you'll get big swings down, swing up, swing down, swing up. On the days that aren't so great, you'll just end up with this, just kind of, chop and not really going anywhere. So those are the days where you may have one or two setups. 9:30 may roll around and there may not be a gap fill, and there may not have been a setup in the ES, and those are the days where I would stop trading at perhaps the European close. And I found that balance is really what's helped my P&L through the years. And the question is, do I trade the choppy markets? Obviously, it's hard to identify the exact start of a choppy period. So in hindsight, you could say, well, okay, this section right here is choppy, and I'm not going to trade it. But at the time, it's not really identifiable. So the question is, do I trade the choppy markets? And what I end up finding is that in the choppy markets, that's when we have the ticks coming into play. So we'll get a high tick at the high, or a low tick at the low, or a slight tick divergence. And the best way I found to identify a choppy market is when we either, let me see if I can find an example. So it's when we either break a short and then break a long. So for example purposes, we'll say I drew the short, we entered, we traded down, but then we broke the short. So I draw the long, we trade down, we break the long. Well, now we've broken a long setup and a short setup, so that's how I identify chop. And then the second way is I draw a short setup, it trades, and then the long setup trades, and we get stuck right in between those two setups, that's an indication of chop. So I like to stay out of these mid-range sections, and I like to stay out of the market when we break it long and then break a short right after it. So that's kind of two ways of how I identify a choppy market. We've talked about the volatility index. We've talked about gold. So each night I just zoom down to a daily chart, and I like to use the 6-month and just look at things like the VIX. And again, the VIX is making higher highs and higher lows in the daily. And what is the S&P and the Dow, the NASDAQ and the Russell doing? Well, they're making lower highs and lower lows on stronger volume. Excuse me. And you'll notice that on the daily chart, it's much easier to see the increasing volume on the down days, the lack of volume on the up moves. Although this up move here did have a little bit of potential, but again, we sold off, and what did we do? Volume increased. So that's when I do incorporate the volume, the candlestick patterns, and the support and resistance levels is on the daily trend, the larger trend. But then I use those technical entries, the NYSE tick, the advanced decline line, and the breadth, using those type of indicators for the intraday trading. At the end of the day, there's not a whole lot to do with the reviewing, in the sense of I don't try to predict where the next day is going to go. Instead, what I'll do is pull up the 512 tick chart and the 15-minute chart. I like to actually give myself a little bit of a break in the afternoon, go out, get a bike ride in, go for a walk, have some dinner, come back and review the markets on a 512 tick chart and just go through the day from the morning, drawing all the setups. And once a setup breaks, so for instance, once the 61 breaks, I just start drawing in the opposite direction, making notes of when setups occurred so that then I can compare those to my notes, my trade setups. I just keep a big legal pad next to me here, and so I just compare the hindsight setups with the setups that I actually took. And what I found is, the great days are the days where those two line up. And Gary mentions you can also compare the ticks as well, and that's true. It's a little bit more tedious and time consuming, but I do see a lot of value in pulling up a tick chart, a 15-minute chart, and a 512, and going through the entire day on the 15-minute, the 512, and then comparing the tick, and then minimizing that and pulling up a 512 and a 15-minute of the euro and going through the exact same exercise. Obviously, you won't have tick data, so it makes it a little bit easier. But the half hour that you spend doing that each night, for me, it completely ingrained the setups and really helped give me the confidence to take them as a limit order when they arise. So, it's just something I've been doing every night, and I find it a great exercise. It's practical, and I also end up, reviewing my trades at the same time. I'll dump my data into Stock Ticker and Excel using the Trading Journal spreadsheet, so I can review it at a later time or review groups of trades as I've talked about in the past. And then it's just a matter of, reviewing some of your notes for the day and just kind of taking a deep breath and assessing your trading. And the final thing that I do, that at least that I have on my checklist here, was the swing trading watch list. And that's just a simple matter of I like to look at the 52-week highs and 52-week lows of stocks making highs and lows, and just kind of helps me get a gauge of, what stocks are continually making new highs, what stocks or sectors or industry groups are strong, and which ones are weak. And then which ones may be rotating out, meaning which stocks and sectors were strong that are now making lower lows, the trend has changed, and which stocks that were doing poorly have now reversed. And I do take some swing positions on stocks as well. Gary, there was no webinar on Memorial Day in lieu of the holiday, so you didn't miss anything there. And let me see, I'm just going through a couple more things I have written down here. I think that just about covers the trading routine checklist. We talked about, starting in the weekly. The week really starts on Sunday, starting from the weekly time frame. You don't have to review the weekly chart every day because it doesn't change that much, and you really can't review a weekly chart until that week has closed. Just like you can't look at a daily candlestick until that candle, that day, has actually closed. Because at noon, the candle on the daily chart may be a hammer, but by the close, it may be a large body. So the candlestick is really invalid until that time frame closes, and that goes for whichever time frame that you're looking at. We talked about the pre-market, going through the ES, looking for that gap fill trade, not trading the first half hour of the NYSE session, and then looking for 15-minute setups on the ES. The Euro is valid from really 7 a.m. on Central Time. There's no time restrictions in there. And if you'd like to wake up and trade the European session, that's also another good time to trade. Remembering to check the economic calendar, not for necessarily actionable trades, not trading off of the news. I don't, anyways, trade off the news announcement, but I like to know that I'm not placing a trade 30 seconds or 2 minutes before a large number that might be coming out. Always knowing where the daily trend is, and then zooming to the 15-minute chart is very important. And then reviewing your notes at the end of the day, reviewing the market on a daily basis. Really, I mean, you can get this all down to 30 minutes or shorter. Obviously, it starts with a little bit more time commitment, and I'll be honest, I would spend a lot of time recording a lot more data than is here, but I've since then condensed it down and condensed to the things that I find applicable for trading the ES and the Euro. So then I kind of wrap up with just putting together a little swing trading watch list, and then that's the analysis for the day. And just a couple questions I'm getting in here. Gary said, I would like a recap on the gap fill in the future. Yeah, we can do a recap of that. I had a request for a webinar, going through an entire week's trades, and I can put that together as well. Obviously, you can always review the webinars in the past in the archive, but I can do more webinars on similar topics, maybe looking at them in a different light, maybe looking at them with different data, with current price action, because just looking at one setup on one time frame is great, and it can be helpful to understand that setup, but it's really a matter of looking at the setup every day, identifying, is it there or is it not there, and then you can go through and best identify the trades to take. So, as you mentioned, it's a series of repetition, looking at the setups over and over again, looking at the markets in kind of the simplest way that you can, only taking in the data that is necessary. You don't need to be in front of the screen 16 or 18 or 20 hours a day looking at 50,000 indicators and news feeds. Keep it simple. Whether you trade a halfway back methodology, whether you trade a high of the low bar break, a breakout strategy, whether you're using point and figure charts or market profile, a lot of the concepts transpose rather easily. So you can get this specific checklist in the member dashboard, and I really encourage you to print it out. Go ahead and make changes, add things, pull things away, and actually use it as a checklist. And I personally kind of enjoy having checklists and post-it notes and things like that. Those help me go through the day. Those help me keep track of things like the open gaps I keep on a post-it note. And my trading routine now, I don't need the checklist because it's just ingrained in my head, but it started like this as a checklist. So if there are no other questions, I think we can leave it at that for tonight. There's a lot of good stuff in here, and I wish you all a great week. As always, you can email me outside of with the webinar, eminimind@gmail.com, if you come up with other questions or think of something else afterwards. And I wish you all a great evening, afternoon, and thanks for tuning in. We'll talk to you again next week.